Yesterday what we did was this. So yesterday we were trying to create the P&L apart from the first day when we completed the customer segmentation, location, pricing decision. Yesterday what we learned was to create a P&L. So in the P&L you have normally a requirement to do revenue, requirement to do the cost of sale, manpower, operating budget, marketing expenses. You may want to have a delivery option, so we will do today that option we will do today. Then the other expenses, and then we see what is the profit for each month, and then profit before taxes and taxes. So yesterday we also learned how do we model the revenue based on the quantity and price. So this was the market segment that we were selecting. We continued from there. How many percent we think we can correct, we can, this is the base market size. So how much we can capture in each month, so we can project a growth pattern. But we always need to come up with a marketing plan, how we can recover, how we can achieve this capture ratio that we are talking about. So this was per day guest, how many guests we would be having in the restaurant, and then total how many in the month we gonna have. And then we this was the month, and then we said okay, how many items each market segment will be producing. So since we are taking only two samples here, two products here, so they can easily see, we can easily see, okay, if the old age peoples, half of them will take immunity booster, and then maybe 60% of them will take fresh juices, means that some of them may take twice, which is fine. And then the working professionals will mostly focus on immunity booster, and some will be on the fresh juices. So we can calculate how much immunity booster we will be able to sell from this market, and how much fresh juices we can sell. We combine up together in the whole month, and then we say okay, what is the list price of each product. List price normally doesn't change, but we can always do the discounted promotion, so you can vary the discount promotion for each month. So by doing this, we have configured the flexibility in our model, so that you can change and give more discount, less discount, without changing the price itself for any time. And then what is the achieved price after giving out the discounts. So what will be the revenue if we are able to do this. So that's our monthly revenue. Then we, in the same sheet, we factored in what is the cost per portion, and then what would be the cost of sales for immunity booster, cost of sales for fresh juices, and the total. And then we discussed also on how we are going to see the labor cost, manning cost. So manning cost means manning usually will require based on a formulated way of productivity. So we said okay, if my total consumption or total customer service is this, total portion is this, how many total customers I'm serving per hour, how many total total portions I'm doing per hour, assuming that I'm gonna work my peak hours of the restaurant will be 4 hours, 2 hours in the morning probably, and 2 hours in the evening. So that's how we can figure it out. And then we also discuss that okay, if that is the productive, how many customers I can serve in 1 hour, and how many juices or how many immunity booster I can make in 1 hour, assuming that both of them has similar preparation times. If they need more preparation times, then we can factor in, instead of the whole portion served, we might have to drop down each portion that we have already. So we can just split it out, and then we see the productivity for each, so to estimate how many peoples we need to hire. And based on that, we said okay, service people we need to hire 2 peoples, by saying that if we need to serve 70 customer per hour, but I can serve only 50, so means I need 2 peoples to be able to serve 70 per hour, right? so that will become 100, but it's okay, we can have some extra capacity. And then if I need to do 80 portions per hour to prepare to produce, then the production peoples will be, if they are able to prepare only 30 portions in an hour, then it means I need 3 peoples per hour, right? So per for my job. Now you can hire them on a permanent basis, or you can hire them on a per hour basis. That's another discussion. So for the time being, we just need to say just need to know how many peoples do we really need, right? And then how many is the for each month separately, depending on how much we are actually producing, the productivity remains the same. In initial startups, when you are doing it, you may have less productivity in the business, so you may have lower productivity in the initial time, and when they trained already, when they have learned, then you can increase the productivity to reduce the manpower while the business volume is increasing. So that's another way of making the model. And then we said, okay, how what else we need in the business. We need service, we need production, we need a supervisor, we need a reliever in case somebody got injured, somebody, and we need to pay the leaves, we need to do the public leaves, public holidays, so they will accrue, otherwise we have to pay overtime. And then we say, okay, what is the basic minimum wage? Now here is the difference. If we want to hire per person per hour, let's say, then 2 people for 4 hours gonna be 8 hours, but then we can always see how much is the per hour wages that we are paying in our in our area. But if the local conditions doesn't allow to hire per hour and pay per hour, you need to hire them full time. So I am assuming full time. You can assume per hour as well, so you need to just factor in the labor cost per hour, and then what is the basic pay for each position, and then how much will be the total manpower cost, and what will be the benefits. So that is we get the that's how we get the labor cost. So there is at least some detailed justification of how we have come up with the numbers instead of just making a rough estimate. So these kind of financial models are easy to explain and easy to review by anybody, and they also give a sense of what we are planning, how we are going to operate our business. So every single step in your business planning, in your organization planning, is covered from this financial model, right? Then we also looked at what is the other expenses. Now other expenses means your packaging, your serving, your electricity. So what we discussed yesterday was that we need to list down first what are the total expenses that we may have to do. So it can be packaging, serving, electricity, rental, maintenance, office, marketing expenses, and everything else, right? So this is how we are gonna we're gonna drive the total. And then we gonna be looking at, okay, how they are related to our business volume. So some of the expenses may be related to the customer served, some of the relation may be related to the portions, some of the expenses may be related to the revenue in some way somehow. For example, packaging, it may based on the portions, how many portions we are packing. So it may base on the portion. So we assume $0.1 per portion. So that's how we get the total cost. Serving kits, maybe it's by customer, so we get by customer cost. Electricity we assume as a fixed cost, depend no matter how many because the electricity will remain fixed if we are operating months are and operating days are fixed. Rental we assume fixed plus a percentage to revenue, just to demonstrate the use of the different options. Rental can be fixed, rental can be entirely on revenue, can be on profit sharing. So there are multiple ways of understanding modeling the revenue. However, we assume fixed rental plus a percentage of the revenue, so the revenue continue to increase. Then you may have some other miscellaneous cost, where you have other fixed expenses, and then you have office administration when we are doing the business. you still need legal support, you need finance support, you need HR support. So those things either you can do by yourself or you can outsource it. So we assumed that okay, we're gonna outsource everything so that we can focus on only what we are doing. We develop the product and we market it. That's what is our job. And then we said okay, that is the total operating expense in our day-to-day operations. What we are going to do for marketing, right? So here we discuss that okay, what will be our marketing channels. So we brainstorm a little bit and say okay, we're gonna be doing digital, we have a website, we will do some advertisement, we will do some events, we share some free sampling, we hire a couple of brand ambassadors. In which month we're gonna spend, how much we're gonna spend. So we planned it for those months. Some expenses are continuous, one fixed expense, some expenses are one time, and then some expenses are just for 3 months, like events, free samples we give away for 5 months based on the cost of production, how many samples we're gonna give. So we have factored in here. So here we say we're gonna give them 200,000 samples for free, 50,000 each month. So that just to get the taste out and then see the production. So that's the value. So this is the total cost. And then we linked all these costs into the main P&L. So cost of sales, manpower, operating expense, marketing expense. Now we have to do the delivery expense. So delivery expense we didn't do yesterday because I wanted to demonstrate one concept here of doing it, how we make a decision to do by ourselves or do by contractors. So that's what we are going to learn today now. So let's hang on. Let's do it for future years. Yeah, so now we're going to decide how do we deliver. So we can do it in a way that we can we can make a comparison here. So let's say the delivery we have two choices here. One is to tie up with another company who is already in the delivery space, and we just contract them per order how much they are going to charge, or we hire our own delivery boys into the locality and then we ask them to do it. So let's say we have half of the orders on delivery and half of the restaurants we're gonna come and sit at the restaurant, right? So that's what we are gonna decide. Or so we have to decide in some ways. So let's say the delivery, maybe let's say 25% then. So delivery 25% means the total consumer we are going to sell is 9,000. So means 25% of them will be delivery based. So you can use a fixed percentage, or you can say each month maybe is a vary. So you can do it in this way also. So let's say we factored in the whole percentage delivery ratio, number of deliveries. Yeah, so some months, let's say initially we start with 25%, then we increase it to 35% in each month, right? And then we say okay, up to 45% of our business will be from delivery. So that's how we say okay, total how many deliveries we are going to do in a month, right? So how many deliveries we're going to do per day, divide by number of days. Number of days we don't have, but we have it somewhere here. So you can link from there, and then round. Don't forget the round, but round, otherwise then your deliveries will be in round, not in the in absolute numbers. Like this. So now we get round of deliveries on a monthly basis, right? So that's the delivery we may follow the whole time. But if you say that no, actually my peak period is again only 4 hours, then I have to tell the then we can divide it even by per hour delivery. So divide by 4. So we can say okay, now we are going to get only 20 deliveries an hour, or 50 deliveries an hour. This information is going to be critical when we are deciding what will be the cost. So now we have two choices as we discussed. One choice is, the first choice is to do by ourselves, right? Do by ourselves. अरे कृपया करके शांति रख लो यार प्लीज, भाई बहुत शोर मचा रहे हो तुम. पहले दरवाजा बंद कर दो. Yeah, so either we do by ourselves. When we do by ourselves, do by ourselves when we do by ourselves, then we can choose that okay, we how many people do we need to hire if we want to do by ourselves, and what are the equipments that we need. So if let's say you are working in a very close community, you may hire bicycles, you may buy bicycles, but how many? If one person is gonna, if one delivery is going to take let's say 5 minutes or 10 minutes, so we have to say if I have to do per hour delivery 20, then how many do I need? If one delivery is gonna take, let's say one delivery is going to time per delivery, let's say it's gonna take at least 15 minutes. So if let's say then we just say okay 15 minutes, then for doing 20 deliveries, if you have to do, then you means you can do only 4 deliveries in an hour, right? So then you need divide by 4. So you need 5 peoples, and you need up to 22 peoples when you are hiring more. If you are able to do only 15 deliveries, 4 deliveries in a month. And how much is going to charge you? So that's the number of peoples. So if one person, or you can say you can do a contract, you can pay them $0.01 or small money for each delivery, because you're not charging a huge amount for delivery, so people may not be ready to deliver for very small amount. So if you say okay, I am gonna hire these people on a permanent basis, so that's the cost of manpower. Let's say you pay them $100 a month, which is very low, but just for the sake of having a financial model, we can create it. So that's the cost of delivery plus the equipment. So what you may have to rent one bicycle for each of them, right? Otherwise you will not be able to use them. So let's say one bicycle cost me another cost of bicycle, so that's a fixed expense. It's not going to be your operating expense, but it needs your then now you need to start writing up the capex. So we haven't discussed on the capital expenditure because yet, but we can discuss now. So we need bicycles, right? So we need if we every month we need to have some. So you cannot say that okay, we can buy around 20 bicycles at the end of the period, 15 now. So you can say okay, these are the bicycles that you need. So you can link it with the delivery months, you can link it here. So these are the delivery, these are the bicycles that you need in each month. You can round off the calculation. Right, and then now you are able to get it. So these are the number of bikes. Now there are the other choice is, so totally how much you need in terms of expense. So you need, let's say the cost of bicycle is $400 per by the end of the day we will need 22 bicycles. So let's put this into the target. So you need 22 bicycles. You can always buy small numbers, that's not a problem. You can buy staggered, but we need this at the end of the month, right? So quantity price is another $400. So total cost you need $8,800, and this is going to have a depreciation. So depreciation usually means that we're gonna charge this cost into our P&L over a staggered period of time. So let's say if the bicycle's life is only 3 years, that's the maximum I can use the bicycle. So means every year I'm gonna charge 2,953, and every month I will charge $244. So that's yearly depreciation, and that's monthly depreciation. So why do we need to do that? Because we need to charge this into our profit and loss statement. And if let's say some assets life is 5 years, then the depreciation will also definitely reduce. But we assume bicycles to be as a life cycle of only 3 years maximum, or maybe 2 years, but let's keep it for 3 years. Now this is first choice, right? So these are the first choice. Now what if I contract out the delivery and say, actually I don't want to hire it, I want to pay 0. Let's say $2 per delivery. So the cost of outsourcing, so you want to compare, if let's say you are going to do these are the per hour deliveries, right? So if you're gonna spend $0.2, so that's your spend on a monthly basis. So now you can see but in that case you don't have to really buy any equipment. So the operating cost is pretty much the same. If you are able to do a bulk deal, let's say for the small amount you can do 0.2, but for over 1,001 you maybe get a discount of 0.18, for example. So you can always negotiate. Then your operating cost is going to be less by $2,000 first thing, and you don't need any kind of investment into bicycles. So let's now, for time being, we assume that we gonna do outsourcing of the bicycles, right? So you can keep this model, and then you can say, okay, I will choose this one, that's my choice. So now you don't need it anymore because you have chosen to not to use it. So in the P&L, my delivery expenses will be linked with this line instead of this line, right? So we get it out. Now we have completed the first part of it. So that's how we can manage it. If we do it by ourselves or we don't do it by ourselves. That was one example of evaluating whether we do it by ourselves or whether we don't do it by ourselves. So that was one choice to evaluate the decisions, what are the benefits or what are the losses. So we evaluate all the possible implications in terms of operating expense, in terms of fixed cost, in terms of fixed monthly expense. Let's say if we are not able to negotiate the contract for $1, $0.2, or let's say it's gonna cost us 0.25, for example, just to give you an idea, then it would cost us, yes, it would cost us $20,000 more. But every year, every 3 years we have to spend 8,000 bicycles. So 8,000 into 3, 8,000, so it's 4 years, and 8,000 is last for only for 3 years. So we are actually spending extra on 4,000. We are saving around $4,000 but in 3 years you have to spend every 3 years you have to spend 8,000, right? So 4,000 into 3 is 12. So you are still saving only $4,000 in 3 years. That's a very that's how much is per month. It's about $100 a month only. But for that you have to manage all these peoples, you have to manage all the bicycles, you have to have a storage for them, you have to have, so there are cost to it. There are always cost to it, and there may be accidents, there may be the mishappenings, so which you are responsible for. So apart from taking the financial constraints, you also need to think about the operational difficulties of doing things by yourself or outsourcing it for your to your competitor. So in our example, even though it's clearly we are paying less, so we choose this selection. But even though we might have been paying higher amount initially, I would still advise you to choose outsourcing, because even though it cost us slightly higher in first year, but at least you don't have to have a operating spend in the beginning, capital spend in the beginning, plus you don't have to manage the people, so many peoples, and worry about the theft, worry about the accident, worry about the storage, worry about the parking, nothing, right? So that's how we make the decisions. That's one. Now what else the other decisions? So here you have taken up the depreciation. We haven't taken up the capital expenditure part of it. So now let's we discuss about it. So to produce these machines, you always need to have equipments, right? So you're gonna need a mixer probably. So what are the equipments needed for this particular job? So you have to think and brainstorm that you may need chairs, yes, you may need tables, you may need equipment, juicer, mixer. So equipments may be juicer, you may need a mixer, you may need a blender, or you maybe need all three in one thing. But since you're gonna make a lot of things, so how many you need? So let's say you in all in one juicer. So you can always compare. So let's put it separately first, the list. And then what else do you need? You need a machine for packaging, machine. What else you need? You need a seal, yeah, that's packaging machine, and sealing machine is the same. So these are the pretty much basically the machines that you need. How are you going to decide how many chairs do you need? So you need to see what is the capacity that you need maximum, because you can continue to buy slowly as well. So you can always look at your expenses, this is the expense sheet. So we can start working around in this under this sheet. So capex, requirements, chairs. So chairs, how many you will need? So if you're gonna have, let's say, total 8,000 customers in a year, in a month, so you're gonna decide, okay, I need divide by 31, sorry, yeah, divide by not by the numbers, let's link it with the manpower sheet with the number of days, then it's easier to copy formula like this. Yeah, you need 8 per month. Chairs, sorry, yeah, chairs, customer per day, how many per hour, or how many per hour maximum customer per hour. Let's say you need you have only 4 maximum operating hours, so you will need 70 per hour. So now let's say if you say that, okay, to the person will sit for 15 minutes per drink, or 20 minutes on an average in my restaurant to have one drink. So means that you need to have how many customers you can serve in 1 hour from one chair. So you can say that you're gonna be using it 3 customers per hour. So this divide by 3 customers per hour. So you need 22 chairs in a minimum. So chair requirements based on 3 customer per hour, right? Correct. So you need 23, 24, 20, 57 chairs in total. So for 57 chairs, how many tables? So since you are not going to have one table for one person, right? You may have it small ones, or otherwise you can merge together and design in a way that on each table there are at least 2 people sitting, which can be completely strangers, right? Otherwise, people who may come together with their friends, with their families, they also can enjoy the drink. So let's say on an average you're gonna put 2 chairs per, or 3 chairs per table. That's the average. Some may be 2, some may be 3, some may be 4, some may be 6. So but on an average it's gonna be turn out to be 3, right? So if 3 tables at 3 chairs average per table, so that means divide by 3. So you need at least 8 or 20, right? So that's how what you need. So round, so you can do round of this one also, and you can do round of this one also. So now you need, now you know how many you need. So you may have some breakages all the time, you may have some extra peoples, so let's make it a round off. So now you need by end of year 60 and 20. So let's say, okay, this is my requirement: 60 chairs, 20 tables. Let's say each of them gonna cost me $250 and $400 for a chair. So the total amount that you need is this, and it can run for 5 years easily, because that's the minimum. So now if we got it, okay. So that's how we decide one thing. Now let's decide on the other equipments. Now we need a juicer. So you have one option, right? So let's say juicer, mixer, blender. Now you have different options here for juicer, mixer, blender. Let's say we take it one by one, so then you will be able to understand all 3 at the same time, right? Juicer. So there may be different capacity of juicers available in the market. Let's say one juicer is, so that there may be different capacity and different prices. So juicer, model 1, model 2. So how to select different model, how do we select the model, and how do we select the capacity? So that's how we're gonna learn now. So juicer, so let's say the capacity, so how much is the capacity for each model? So now we say, okay, if one juicer is going to be able to serve, it's gonna take at least a minute to do the juicer or blender, or normally they are from all 3. So let's say it takes a minute to do one portion of things. So right, so in 1 hour you can do 60. And there are something which is faster or can do multiple like a larger portions, so 60 portions in an hour, because you're gonna buy smaller ones so that you can prepare each portion. It may not be having to, or you can do multiple portions, right? So you can say, okay, the juicer can submit maybe 100 portions in an hour. Model 2 can give me 200 portions per hour. Then the model 3 gonna give me 250 portions per hour of all my fresh juice or blender or whatever is my requirement. the price it's gonna cost me is, let's say this is gonna cost us $2,000. It's gonna cost us $3,000. This gonna cost us $3,500. So what is the capacity that I need now? So first is, if that is my requirement, how much maximum capacity I need. So let's look at the different models here. So based on the maximum, so we are not going to look at month by month. So this based on maximum I need is 24,000 portions, right? So total portions, so we can say either you can use a formula if you don't want to serve the max out of this. Correct. So max is this one, and then it's gonna be remain same for every model. So this is, so number of, and this is a month, right? So divide by 31, divide by per hour, right? So it's gonna be divide by 4, because that's what we have been taking all the time, and we're gonna have 4 peak hours, means everything has to be prepared in those 4 hours. So divide by 31, divide by 4. So on an average we need 195 per hour. So that's our maximum requirements in this particular year. Now juicer can go as long as 5 years, right? So the good quality juicers can last 3 to 5 years easily. So you don't want to buy 100 and less capacity and continue to buy the equipment. So there are both choices available to you. So, and the minimum is what? Total maximum portions you need, right, per hour, and total minimum portions per hour. So let's say you would use the same formula but change it to minimum. Yeah, minimum you need 72, maximum you need 175. So you have 3 models. 73 per hour means you can survive with this 100 model, 101, but how long? Until this month. So because at the rate of 14,000 you will need probably the second model already, and by the end of the year you can still survive with this same model up to the 200 a year. So but this is going to cost 2,000 and it's going to cost 3,000. Since we are going to we're going to need a bigger juicer, bigger blender, bigger supplier, bigger equipment initially at within 2-3 months. So there is no point in wasting time and money with this particular model, because if we have to buy another one, it's going to cost us another 2,000. Total become 4,000. Now the model is with the 200 is already available for 300,000. Now there is a choice between two of this, 2,000 or 3,500. This is 200 and this is 250. Remember, we are the juicer quality is going to be good enough for 3 years or 5 years. So and we are going to increase our business by at least 5 to 10% on a yearly basis, which means this will not be sufficient after 1 year. So we need to choose this model, correct? This model. Now there is one more choice to it. So let's we finalize that if we want to buy a juicer, mixer, blender model, we're gonna be it's going to be this one. Now we have a choice. If we want to buy separate juicer, separate mixer, separate blender, what is the cost gonna be? So we need the same model but different varieties, so that we can reduce the cost. So you can always compare. Normally in the market, when you are buying, the things come with one set already, so you don't have an extra set, but you can buy extra motors for them to run individually, so that you can divide the job in between the peoples, because if you're gonna have 3 employees only one equipment is not going to be enough, right? So you may have to spend extra money on the motors, so that you can divide the job between the peoples, so that they can prepare it. So now let's say you bought it, and now we have decided that this is going to be another $500 for our motor. So you can leave this working so that you know in what is gonna be. So let's say now we're gonna bought all in one option, not the separate options, and we're gonna buy how many? One is enough for us, but a higher model, and that model is gonna cost us $3,500 plus another $500 for extra motors. So total is $4,000, and it's gonna leave us for another 5 years so easily, right? Packaging machine, similar calculations, similar way. How many do we need to serve? What are the packaging? What are the models? Since we don't have the data, we assume for the time being that we just need one packaging machine, which is gonna cost us another $2,000. We get the equipment, so that's our total capital requirement. Initially our monthly depreciation is going to be this much, right? And then in the P&L we come here and then we say, okay, we need this depreciation, get it, right? Now the interest. So since we know that our total requirement is 29,000, that's capex. Now how much money do you need to start the business? You still need money to start the business because you are not going to get immediately, right? So how you are going to calculate that? So let's calculate this. Investment required, correct. So investment required means first thing is you need is capex. So capex we have already calculated, you need $29,000. Now as you see from your P&L, you are making losses for a couple of 2 months, right? So you need to pay the salary, you need to pay the supplier, you need to pay for manpower, you need to pay for rental. Let's say rental is 3 months in advance. So how much is your rental? $500. From our expenses we can see what is our expense. Expense rental is our $300 plus some amount. So let's say we assume that we have to pay 3 months advance rental, so the fixed portion into 3, that's our advance rental. We need working capital to buy the equipment, buy the things in advance. So let's say we need working capital, 3 months salary, 2 months salary. So what is the salary here? The salary is about sorry, in the manpower sheet. So salary is about 2 months is 3,200 1,650 into 2. So let's see, yeah, 1650 into 2 months salary. So this is what we need extra. Now what else do we need? So that's pretty much it. And then you can say, okay, your total money requirement is 33,000. Do you have 33,000 to at a start to use? If you don't have it, you may want to take a loan. Let's say my own capital is $10,000 and I take a loan from my friend for the balance. So the balance is 22,000, or let's say you have 15,000 and you take a loan of 18,000. How much? At, let's say you take it at 10% or 2% per month. How much is the interest that you have to pay now? So you can put it here in the P&L, 18,000 into 2%. That's your interest portion only, right? Yes. So how long you have to pay the interest? That's what we're gonna do now. So here is, this is your interest until for the whole year. how long you have to pay, you can see your accumulative cash balance, right? So how much is your accumulated cash balance? So your accumulated cash balance is your your revenue minus total expense minus not the depreciation, only the interest, and minus the tax. So since if the tax is negative, you don't have to include it, minus maximum of this or 0. So you need to spend 995,000 in first month. So this is your spending, is this is your cash income is going to be. How much is the accumulative cash income? This, sorry, so you have already added this, added already. So this plus the last one, so this is going to be your accumulated net income. So whenever you say, yeah, you got $18,000 already here, right? So now you can say we're gonna stop paying the interest. What I will do is I will repay my interest. So you can say your cash budget actually is a separate exercise that we are not covering it at this point of time. Cash, then you say okay, loan repayment here 18,000. So your cash balance will be this much, and then you can again add the new cash balance to the total requirement. So instead of this, we can say we are not going to add by the 20, we're going to add by the 23. Sorry, my mistake. So you're gonna have again 46,000. So that's how you can do. So you can plan out your cash expenses as well, your capex expense, because your capex is already planned, because you already took the money from your own money and your investor. So you can make a judgment how much money you have required. So this is how you can play around with the numbers. So these are very small parts of financial modeling. So you can do that in any time. It's not that very complicated. So the more idea was to give you an idea how you can complete your business model. Now you have understood how you are going to make an estimate of capex, how you're going to make an estimate of your delivery expense, other expenses, how you compare between the two options, doing by ourselves or outsourcing it. You understand how to estimate the manpower requirement, revenue, budgeting, segmentation, making pricing decisions. That's pretty much the most of it. The rest of the things related to the balance sheet or related to the financing, that's a usual, that depends on the scenario. There is no standard model for it. You just have to prepare it while you have the details. It depends on the individual business requirements. So that's